Welcome to the Explainer. Today, we're going to break down a really powerful tool, one that helps traders see market trends way more clearly.
All right, let's start with a problem that I know every trader has faced. You're staring at a price chart, right? And with all the little ups and downs, it just looks like, well, noise. So how in the world do you cut through all of that to see where the market is really heading?
Well, there's a tool out there called the Guppy Multiple Moving Average, or GMMA for short, and it's designed to do exactly that. It's all about taking a super messy chart and turning it into a clear, easy-to-read story about a trend's strength and its direction.
So, what is this thing anyway? The Guppy was actually created by an Australian trader named Guppy. And at its core, it's a trend-following technique. The whole point is to identify which way the trend is going and, hopefully catch a ride.
Okay, so the Guppy is built from 12 different exponential moving averages, or EMAs. Now, exponential just means they pay more attention to recent prices, so they react a bit faster. But honestly, the real magic here isn't the number of lines. It's how they're split up. They're divided into two very specific groups, and it's the relationship between those two groups that tells us the whole story.
All right, let's dive into the anatomy of the Guppy. I think the best way to get this is to imagine the market is made up of two different kinds of people. You've got your fast-moving, short-term speculators, and then you have your slower, more deliberate long-term investors. The Guppy does something brilliant. It actually shows you what both of these groups are doing at the same time.
So first up, we have the short-term group. You see them here in blue. Think of these guys as the day traders, the speculators. They're the ones jumping in and out, reacting super fast to the news of the day and any sudden price swings. This blue ribbon gives you a fantastic read on the immediate short-term market vibe.
And then on the other side, you have the long-term group, shown in red. Now these lines, they represent the big fish, the slower institutional investors, the pension funds, that kind of thing. Their movement is what really carves out the major underlying trend, the one that can last for weeks or even months.
And this is where it all comes together. This is the core idea of the Guppy. When both groups, the fast blue lines and the slow red lines, are on the same page, moving in the same direction, and you see them spreading apart from each other, that's when you know you have a strong, tradable trend.
Okay, so now that we know what the pieces are, let's talk about the actual signals the Guppy gives us. Because once you learn to speak this visual language, you can start reading the market's story pretty much at a glance.
So the very first thing you want to look at is the distance between the red and blue groups. It's your biggest clue. When you see a big, wide-open space between them, like you see on the left, that's screaming strong, healthy trend. But when the lines get all squeezed together and tangled up, like on the right, that tells you the market has no idea what it wants to do. And that's your cue to be careful, maybe even just sit this one out.
But the Guppy does more than just show trend strength. It can also signal a major change in direction, and it does this through something called a crossover. And trust me, this is one of the most important signals you're going to get from this indicator.
Okay, take a look. This is a bearish reversal. See how the fast blue speculator lines cross down and under the slow red investor lines? That's a really powerful signal. It's telling you that the short-term mood has soured and a potential downtrend could be kicking off.
And you guessed it, the opposite is true for a bullish reversal. Here, the blue lines cross up and over the red lines. This is the Guppy telling us that the traders are getting optimistic, and they're basically pulling the bigger investors along into a potential new uptrend.
All right, so seeing these signals is one thing, but how do you actually use them? How do we turn these visual clues into a real, actionable trading strategy? Well, the most straightforward way is to just use those crossovers as your entry signals. When that whole group of blue lines crosses above all the red lines, that's your green light to buy. And when the blue lines dive below all the red lines, that's your signal to sell. Super simple and really effective.
But what about those times when the market's just flat? When it's quiet, undecided, and those Guppy lines are all squeezed together? Well, there's actually a more advanced strategy for exactly that situation. It's called the compression breakout. The idea here is actually pretty simple, but it's super powerful. See, these quiet periods where the market consolidates, they're often the calm before the storm. They're usually followed by a really explosive move. So this strategy is designed to catch that exact move no matter which way it breaks. Let's look at it on a chart. See right here? Notice how all those moving averages get squeezed into the range of just one single candle? That's what we're looking for. The strategy is to place your orders just above the high of that candle and just below the low, getting you ready to pounce on the breakout. And boom, there it is.
The price breaks out to the upside, our buy order gets triggered, and just like that, we're in the trade. And the sell order that we placed below, the one that didn't get hit, that now automatically becomes our protective stop loss. So we have a clearly defined risk level right from the get-go.
Okay, now before you get all excited and start slapping this on every chart you can find, we need to have a reality check. It is absolutely vital that you understand the Guppy's main limitation. Because, look, no indicator is a crystal ball, and the Guppy is definitely no exception.
There's one critical thing you just have to remember about how the Guppy works, and really how all moving averages work.
The Guppy is what we call a lagging indicator, or a trend-following indicator. All that means is it doesn't predict the future. It's not magic. It confirms a trend that has already started. So you're going to get the signal after the big move has already begun. You're not going to catch the absolute bottom or the absolute top. That's not its job. Its job is to get you into the big, meaty part of the trend.
All right, so let's do a quick recap of what we've covered. The Guppy, at its heart, is an amazing visual tool for following trends. You can use it to see reversals, you can judge a trend's strength by how far apart the ribbons are, and you can even spot potential breakouts when those ribbons get squeezed together. The key thing to remember, it works best when the market is actually trending and moving clearly in one direction.
So we've basically given you a decoder ring, a tool to translate the language of the market, to finally separate the signal from all that noise. So the only question left is, now that you can read the Guppy, what story are the charts going to tell you?